Hey everyone, happy Monday, December 8th. I'm Endrit Sella, and this is Capital Markets Quickie. Let's jump into what's driving the week ahead. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. So it is a brand new week, and markets are already gearing up for what could be the most defining central bank moment of the year. The Federal Reserve is back in the spotlight today, and by Wednesday we will finally hear whether policymakers decide to cut rates for a third consecutive time. Expectations are firmly in place for interest rates to land somewhere between 3.5% and 3.75%, with Chair Jerome Powell set to face questions right after the meeting. His comments later this week could shape not just December, but potentially the entire 2026 trajectory. Now the tricky part is this. The central bank will be making its call without a full set of updated labor data because of the reporting delays after the government shutdown. Even without the latest official jobs numbers, concerns around hiring momentum are likely to push the Fed toward easing again. Powell's remarks on wage pressures, inflation stickiness, and whether the committee expects additional cuts in late January could be the deciding tone setter for risk assets. Tech and retail earnings are also ready to move headlines. Oracle reports Wednesday, and after its sharp sell-off in November over rising debt tied to AI build-out, all eyes are on whether the company can calm balance sheet fears. Broadcom also lands mid-week, and with optimism around its relationship with Alphabet still burning bright, markets want proof that the AI order cycle is not cooling. Adobe is also lined up mid-week, and investors are hoping for clearer direction on AI monetization despite recent stock pressure. Retail joins the earnings mix with some macro sensitivity. Costco's Thursday report may offer details on tariff costs after it took legal action over trade policy. AutoZone also reports, and traders want to see whether profit weakness last quarter was simply temporary as the company spends heavily on expansion. On the macro front, trade deficit numbers, jobless claims, and the latest federal budget reading should keep fixed income desks busy throughout the week. After last week's modest market gains led by tech strength, sentiment now shifts from hope to confirmation mode. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.